the 6 questions you should ask your advisor before you retire. You may not have a relationship with a financial advisor, that's okay, but before you retire, sit down with one and talk through these questions just to see if you have answers. So let's talk through the first question you should ask your advisor before you retire. Am I financially ready to retire? Notice I said financially, not emotionally or anything, but that is important.
I get it. And they shouldn't just ask it, they should demand for them to put it in writing in a full financial plan.
Right.
There's one thing for a financial advisor to say, yes, you can draw down 4% of your assets or 5% of your assets, and traditionally that works. I don't subscribe to that. I don't believe you should give your financial advisor a number like send me $10,000 a month because you run the risk of damaging your investment portfolio. More importantly, that financial plan should generate income, tax strategies, growth targets, and it should have layers of protection in it, and make them present it in writing and walk you through it. So the question I would ask is, what information do you need from me, financial advisor, to run a full financial plan?
So the next question, what income sources will I rely on in retirement and how sustainable are they?
That's critical. That is more important than the total investable asset number. Everybody's so focused on, I have $1 million, can I retire?
Right.
I have $2 million, can I retire? The most important number to ask and answer is how much can my financial life generate in payment or income to me for the next 30 years on a highly reliable or guaranteed income basis. That's the trigger. That's the key. And that income amount should match or beat your highest wage earning years before you retire. If your financial life can generate as much money for you as you were by going to work, would you drive into work every day? A lot of my clients would say no, so we're working on preparing that for them. That's our replace my paycheck challenge. That's the critical component, asking how much can my financial life generate for me in retirement as far as income.
But boy, when you have that answer, when you know that you can just be like, one day.
My clients' eyes light up and they leave without that weight on their shoulder. And you know, it's one of the most satisfying parts of being a financial advisor.
I can tell you're really passionate about it.
Yeah.
All right, the next question to ask your advisor, how can I minimize taxes on my retirement income?
So we need to look at all the pre-tax money. The biggest concern I have for my retired clients is the word income tax, or the words income tax. I don't fear capital gains. That's a fixed amount. We can manage around that. But income tax levels change quite often. And unfortunately, because 401ks were introduced in the 80s and they were only pre-tax 401ks at that time, a lot of folks are sitting on a disproportionate amount of pre-tax money that is going to be forced for them to take out through required minimum distributions starting at age 73 and taxed at whatever the income rates are at that time, and nobody knows for sure what they're going to be. So there's a lot of work that we as your financial advisory team need to do on how we are going to cap the amount of income tax you get, or adjust it and build a tax-free bucket or taxable bucket that's taxed at a capital gains rate.
And then the next question would be, what, if any, adjustments should I make to my investment portfolio?
So moving into retirement, you obviously want to take and this we do through a portfolio x-ray, and that portfolio x-ray breaks down several different things. It'll break down what has your portfolio achieved in growth over a 1, 3, 5, 10-year period of time, and you have to compare that versus an appropriate benchmark to see if your investments are actually performing at the benchmark or better. You need to look at your fee structure. So in retirement, you want to squeeze out your fees. That's why I'm not a big proponent of keeping money in a 401k. As soon as you're eligible to move it to an IRA, you should study that with your financial advisory team to see if it's in your best interest. Watch your fees. The other thing you need to be conscious of is how much risk is in your portfolio. Not a lot of, well, I don't think I've ever had somebody call in and meet with me for the first time and they knew what their standard deviation was, or their measure of financial risk, or their maximum drawdown. We'll show all of that to you inside your current portfolio. And if we went through another Great Recession or COVID crisis, would you lose 10%? Would you lose 30%? In the Great Recession, would your portfolio have lost 40 or 50%? Those numbers can be a little shocking. It doesn't mean we need to give up growth inside your portfolio to protect you. So there's a balancing act we do in all that reporting.
Right. And I could get a second opinion from you too on my portfolio if I'm allocated in the right way now, right?
Yeah, absolutely.
Yeah. And then the next question would be, do I have enough saved to account for inflation and unexpected expenses?
Yeah, so that's an often missed component inside of financial planning. We have an inflation number that we can either use historical numbers, but we typically raise it to say, what if? You know, historically, I think over the past 20 years, it's been hovering around 2.7, 2.8%. That's off the top of my head. But we'll start with 3%. And I've had clients of mine say, okay, do 4, do 5, do 6, right? Because it's an unknown and you want to prepare. I believe, and this is years ago, I had a $3 million client and we raised the inflation projection inside their financial plan by 1%. And over a 30-year period, it stole $1 million in growth from their portfolio. So it is a big number, it is a scary number, and it needs to be accounted for.
Well, 2022 inflation was just around 8%, right?
That's right.
That's all right. It's overwhelming to think about that.
It is.
Yes. So the last question, do I have a plan for long-term care? Chris, this is something you're really passionate about because 7 out of 10 people will need long-term care at some point. And if you don't have a plan, this can wipe out your retirement savings.
Yeah, and virtually no financial plans that I've ever seen outside of our own firm have that number built in the final stages of our lives. There are 4 ways to insure for long-term care or home care. The first one is straight long-term care. That's tricky because whatever you're paying in monthly can be raised. So you wouldn't want to pay into something for 10 years and then find out, well, I've got a 30% rate increase or a 40% rate increase that I don't want to afford and have to drop the policy. So I'm not a big fan of straight long-term care. The second option for you is a annuity with a home care rider, where you can basically, a lot of them will double the income. So an income annuity will send you a monthly check. And a lot of them with home care riders will double that payment for a period of, let's say, up to 5 years if you need home care or long-term care. The third product that does well with satisfying our long-term care needs is actually life insurance. And it's interesting that it's called life insurance. It should be called death insurance because you buy it for the death benefit, but this is truly life insurance. You can invest in life insurance and then pull down some of the death benefit or the majority of the death benefit for long-term care needs. That is a more favorable plan, I believe, than a straight long-term care policy. Last one, fourth, last but not least, you can self-insure. So for my higher net worth clients, we will build in that into their plan and we'll know we are going to have money that may not go on to your legacy, but you can use it for your own long-term care needs.